Ken Range Theory Trader back with you with another video on the 4x4 trade, the easiest USA counter range theory trade to see. So let's not waste time and get right into it. I wanted to show you the picture before we get into the bare bones of the program or the pattern. So this is the pattern that you're going to be looking for. Okay, this is a 4-hour chart, and all you're going to be looking for are 4 candles of the same color. 5, the 1. Sorry, this is 1700, 5 p.m. Eastern Standard Time. Okay, 1700. Okay, that's according on the East Coast. And then the next one, just 1, 2, 3, 4. Okay, so no matter what time zone you're in, you should be able to figure this out. USA session, as far as this pattern is concerned, starts at 9 a.m. Eastern Standard Time. That's when you start trading. Your trading window for this pattern is from 9 a.m. to 1 p.m. Eastern Standard Time. It's a 4-hour window that this pattern must play out. If it doesn't play out in that time frame, it's null and void. Okay. So again, step 1, we look for the low of day, ideally at 5 p.m. or 1700, which is right here. Okay, so the low is created, boom, price goes up. It continues to go up for the next 4, 8, 12, 16 hours. Okay, so there's 16 hours of rise. And then all we need is just a little bit of a retracement. We're not looking for a trend reversal or anything like that, just a little bit of a pullback during the USA session to give us some consistent profits. Okay, so here's the decision flow. First question you have to ask yourself when you come to the chart at 9 a.m. Are candles 1 through 4 on the 4-hour chart moving in one direction? There's only one exception to this rule, and that is the doji or hammer. And I'll show you this, okay, on the 4-hour chart, whereby price just doesn't move that much in one of the 4-hour candle periods. The next question, has candle 4, okay, made the high or low of the day? What does that mean? This candle right here, 1, 2, 3, 4, is that making the current high of day? Right there where my mouse is. Because what we need to see is at 9 a.m. a new high of day to be created after this price action. So it's a progression where you just want to see price go up and then come down during those times that we outline. So let's see. Next step, has candle 5 starting at 9 swept above the high or below the low of candle 4? And then what you're going to want to do in terms of your entry is you'll enter when there's a break below the candle that makes the high of the day, or when there's a break above the candle that makes the low of the day on the 5-minute chart. So now let's actually show you this. And in terms of stop loss and take profit levels as well, stop loss can go below the low of the day or above the high of the day, depending on which direction you're trading. Your profit potential you can expect to make between 1 to 2 and 1 to 5. Sometimes there may be more, but for the most part, this is what you'll be looking at. And sometimes the max take profit should be at the daily open or weekly open price. Sometimes price will go there because when the daily candle closes, it should look like a doji where price opens, goes down, goes up, and then finishes right about where it started. So to illustrate that, let's say this worked out perfectly. This is the daily open price. Price will go up, make a new high, and then like best case scenario, it would reach this daily open price right here. It won't always, but there are times where it does. But I would not go past the daily open price for a take profit. That's just me. Okay. So I wanted to show you this as well because a lot of times people will show these examples and say like they'll act like it wins 100% of the time. It does not. All right. So here's a very clear example of a loser. This is on dollar yen, where you have 1, 2, 3, 4 green candles. It meets the criteria. The high of day being created right here on the 4th candle. The next candle does make a new high of the day. It did have a money candle break on the 5-minute chart, but then look at what happened. Price kept going up. It's going to happen every now and then. It's no big deal because you should be practicing risk management. Keep your losses small and just skip it. Okay, go to another one. But remember, if price doesn't reverse in this 4-hour window and if it keeps going, it's just trending. That's it. Don't try to get it at 5 or 3:30. No, if price doesn't show you what you want to see by 1 o'clock p.m. Eastern Standard Time, the pattern is invalid. All right, it's just a trending day. I don't care what happens after 1 p.m. Okay, you're done at that point. So here goes some real examples that did work out. So here's some longs. So let's remember our steps. You have 1, 2, 3, 4 down candles, all moving in the same direction. Low of day created here. Then 9 a.m. comes along, creates a new low, break of the money candle on the lower time frame, which I'll show you, and then it spikes up. That's it. Let's take a look at the 5-minute chart. Okay, here is the money candle, which creates the low of the day. Price closes above it right here at 11:25 a.m. Eastern Standard Time. And by 3:30, we're out. I don't know if this might have been a 1 to 2, I think. I'm not sure. Okay. But that's it. So when you come to the chart at 9, this is all you're looking for. Candle range theory comes into play with this 5 a.m. candle range. Okay. Folks below it, closes inside of it, and continues up. That's it. Okay. Simple. Same thing. Okay, here's another long example. 1, 2, 3, 4 candles to the downside. High of days here, down. New low of day created. Spikes up. Remember I talked about the daily open price. Okay, price is racing back towards that. So let's see how it looks. Okay, this right here is just what I showed you on the 5-minute chart. So this would have been a 10:05 a.m. entry. Low of the day right there. Money candle gets closed above. This one had a few, because sometimes you'll see a money candle get created, and as long as price doesn't close below the initial money candle, see how it pokes it? It might be kind of small, but price will sometimes poke below the low, and then it poked it above here. But you would have been fine to get in anywhere in here. Would have been okay. Because this initial money candle right here, this tiny red candle, and when price closed all the way up there, I would have been looking to go ahead and start looking for price to go long, and it did so. So even though it did spike back down and create a quote unquote new low of the day, it didn't exactly break these prior lows. So that's just something to stop out anybody and just keep going. So that's fine. Okay, new example now. This is the doji exception that I was talking about. So you have 1, 2, 3. This third candle here is a doji. So it didn't move much, and this is a green candle. You will see that from time to time, but then you have another fat red candle. But you're only allowed one doji. Ideally, the price, the what you want to see is steady downward movement. Because notice this candle used to be solid green, and then it closed all the way down here and then kept going. We still just want to see that consistent price movement, but there's only one. You shouldn't see two. You shouldn't see four. You're only allowed one doji when you're using this pattern. And then a new low of the day is created here in the 9 between 9 and 1, and then comes up a little bit. And that was it for that one. So this would have been an entry at 9:50 a.m. and 9:25 p.m. would have been the exit. But you want to get what you can, because by the time Asia showed up, price tanked. So there wasn't much of a long play here, because prior the trend was obviously short, and it did take out anyone who went long if you continue to hold. So if you would have got out there, had a steady 1 to 2 take profit, stop loss set, you would have made money on that one. But I wanted to show you that too, because just because you got this move, don't expect price to keep rising forever, because keep in mind, some of these may be counter trend trades, and you may be trading against the trend. Okay, so keep that in mind. So here goes some short examples. Now, this is going to be another caveat as well. This is a big example. Sometimes you'll have 5 candles, 1, 2, 3, 4, 5, that are all green, but the high of the day is still created between 9 and 1. It just didn't give you that price action. So in this case, you're going to hold overnight. Okay, so because the high of the day was created between 9 and 12, all right, and it did tank, and it tanked big. Okay, so this would have been, the entry would have been at 11:55 a.m. and the exit would have came in the 3 a.m. hour on the next day during London session for a rare overnight hold. And this is how it looked. This is the same 4-hour chart. The entry was up here, and look at that. I don't know if this was news or what, but remember how I talked about the weekly open? This was a case where the price just completely decimated anyone who went long. So imagine catching all of that. So, again, I don't know if this was news related or what, possibly, but that's the power of looking at this 1, 2, 3, 4. And if you see a 5 here and this high holds, then you could be in for a big move the next day during London, ideally. So, but again, the only non-negotiable, the way you got it, is this high that was created between 9 and 1. This has to hold. Okay, that's the main thing. Okay. So here's another one. Here's the one with the doji exception. You have a slight doji that creates the low of the day, but then you got 1, 2, 3, high of the day being created between 9 and 1. All right, with one doji exception. So price still gave steady upward trend, and then we look for a little pullback during USA. Entry would have been at 9:50. The exit would have been at 12 a.m. Eastern Standard Time when price did tank. You could have got about almost a 1 to 4 on that one. Here's the 4-hour chart on that, the same pattern. So remember, we got the doji exception. Price went up, and then consolidated a little bit, and then tanked right there. Now, I don't show this, but price did actually continue up after this spike down. So this would have been a counter trend trade, because price kept right on going. So take what you can get. When you see these big spikes to the downside, that's your move that you've been waiting on. Get it and get out. Okay. Don't keep thinking, oh, well, it's going to keep going and take out these lows as well. There's no guarantee of that. All right. So here's another one. You got one, the doji exception. This price pretty much did nothing there, but you have your low of the day at 5. You got 1, 2, 3, 4 green candles. High of day being created by this 5 o'clock range, a sweep above it and below it. So this is one where it worked out all in the same day. This is a good day trade. All right. So the new high was created between 9 and 1. Done deal. So here is the 5-minute chart for the entry. Entry window was between 10:35 and 10:45 a.m. Your exit would have been at 12:45 p.m. And this was good for 1 to 5. So this is this. Okay. So this is a perfect trade because you'd like to be out by the conclusion of this 9 a.m. candle between 9 and by 1 p.m. You would have been done with this one on this candle's close, right? Because I said the exit was 12:45. So will it always be like this? No. But if this big move comes at the between 9 and 1, take it. Okay, take it and be done with it. All right. So in conclusion, this is an easy candle range theory to see, with the 5 a.m. candle range being the most important range, because that one does have to be rated before price pulls back and reverses for the New York session. All you're looking for is 4 candles of the same color, but be flexible with the doji exception. But you're only allowed 1 doji as price goes down. Okay, not 2, not 12, just 1. One other caveat is if the 9 a.m. 4-hour candle is also the same color, like this one. Let's go back. Let's refresh our memory. This one. Okay, sometimes you'll get a 5th candle of the same color, but when you see that happen and this high holds, then you could be in for a big move, but it's going to come the next day. But not this one. Let's take a look at the loser. Okay, here, the 9 a.m. candle did not hold its high. So that's why this is not the same as the one I just showed you. This is a loser. This is a winner. Okay, see the difference? 9 a.m. high, the 9 a.m. between 9 and 1. That's the most important time frame for the high or low of the day to be established. Okay, it's just reverse if it's a short or a long rather. Let's go back. Okay, so remember that. Like I said, if you see that where the 9 a.m. candle closes the same color, as long as the high or low holds, just hold it overnight. And you may, again, nothing's guaranteed, but you may be in for a good price move during London. If the higher low of the day gets taken by 10 pips or so, you can exit the trade. And risk management is always number one, because you won't make money if you cannot manage risk. Okay, that's a non-negotiable. Now, here's a special bonus for anyone who watched to the end. This trade also applies to the daily chart. What does that mean? Same deal. This is a daily chart, not 4-hour. 1, 2, 3, 4. Okay. So now what do I wait for on Friday? Ideally on Friday, I'd like to see a pullback because price has been steadily rising all week. Okay. Now this didn't happen on Friday though. The payout actually happened on Monday, but this drop was for 80 pips on Monday. So let's drop down to our lower time frame. And it's just a multi-session M, leg 1, leg 2 between Friday and Monday. But this would have been a 1 to 5 trade. The 10:30 p.m. would have been the best entry over here on this candle, okay, because you just got a high, higher high, and lower high. But again, you want to see Thursday making the high of the week, Friday making a new high of the week, and Friday's high has to hold. As long as it holds, you're expecting a move down on Monday, okay? So you can also use this, but this is only good for Friday or Monday, and that's it. Do these trades happen often? These on the daily chart? Not really. You're going to see more of them you're going to see more of this pattern on the 4-hour, not necessarily on the daily. Okay? Because remember, if this is a weekly chart, you got the weekly open, it goes up and then it closes all the way right here. So it's pretty much a solid green candle on the weekly. And then when the week opens for the following week, you're just catching a little down move, but there's nothing to say. It just can't keep right on going. So you're really just looking for pullbacks. And sometimes, like I said, these can be counter trend trades. But I hope that helped. Very easy pattern to see. So once again, you're only looking for the 4x4 trade, 4 green candles, sometimes 5. Let's throw the master pattern back up here one more time. Right there. Okay, this is just a short example. This is all you're looking for. You come to the chart at 9 sharp. 1, 2, 3, 4. If you can count to 4 with this high of the day here and they're all the same color, you can make money. All right. So thanks for watching. I appreciate your time and attention, and have a great rest of your day.